Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
All right, everybody, welcome back to another live stream. I have returned. It's good to see everybody in the chat. Good morning, good afternoon. This weekend I was down in Florida for a bachelorette joint party. It was a lot of fun. Got to hang out with my sister-in-law and her to-be husband and all of their friends. It was a lot of fun. My wife and I went down. Yeah, so it was a lot of fun. Well, we went down to Miami, got on a boat, went down. We took one guy's friend lived down there, took a boat, toured around the city of Miami in a boat. So cool. Probably one of the coolest, actually might be the coolest boat ride I've ever taken in my life. We were literally floating through the financial district of Miami. So I could see the Citibank and the Chase and the Bank of America building, and it was cool. I was like, man, this is like the trader hub of the Southeast is Miami. Very cool. Anyways, it was a really fun trip, and I got to tell you one extra detail about my trip. We played basketball on Saturday. This is embarrassing. I didn't score 1 point for my team. We played 2 games. I didn't score 1 point on either one. Awful, terrible, really embarrassing. But there were some other people that were also bad, but I had like some hope for myself. I haven't played basketball in like forever, but I am so sore, guys. I got up today, I woke up and I tried to move. My body just said, nah. How tall are you, Nick? I'm 5'9" on a good day, but the thing is, there was like, I wasn't like significantly shorter than the rest of them. Like that's about most of their height. But I just can't shoot. My passing game was good. Like towards the end, I stopped trying to shoot it. I was more like they were using me as the passing guy. Maybe that's what they were telling me to be nice, but they also sucked. Like everybody there sucked. They were like, we don't play basketball. You'll be fine. Several of us barely got anything in. But yeah, I always thought of you more as a hockey player. It's probably the long hair, Lee. I could maybe, I look the part. I think I actually look like a hockey player, which is me totally hyping myself up because I think hockey players look cool. But yeah, because it's a long hair, right? The long hair. Are hockey players short? I mean, I'm not short. I'm literally average height on a good day. But it's good to be back with you guys. Sorry for the delay. Man, Bitcoin is ripping. This year has started out very well. I'm on the right side of some stuff this year. Bitcoin position has been locked in very nicely. This trade is ripping. Oh my gosh, man. It's like every time I move, my back and it's actually my back. That's what surprised me. I guess it shouldn't surprise me because like if you're playing basketball, you're like this, right? You're like getting down low, you're like swooping around and like it was fun. I could see Nick playing tennis. What I actually played growing up was tennis, and I actually boxed. I did, if anybody's familiar with Muay Thai, it is like Thai kickboxing. I did that for 5 years. And it was so much fun. I loved that sport. It sounds violent, but honestly, I never got seriously hurt. doing Muay Thai for 5 years. But anyways, yeah. So I've got the Bitcoin trade running, guys. S&P 500, there's so much to cover. We've had a chaotic last few days. Of course, yesterday, the inauguration of Donald Trump caused some volatility. I was in the airport yesterday, and there was a guy blasting the inauguration on speakers, which made me really uncomfortable just because I knew it made everybody else like, some people like Trump, some people dislike Trump, but it was really awkward in the airport. This dude was like playing out of the speaker the inauguration. I was just like, it shouldn't be controversial, but in the world that we live in, it is, right? Especially in an airport where you just know there's like people who are going to be of all different types of, views and whatever. Anyways, it's not that it bothers me. I don't care if it was Kamala Harris or Donald Trump. I wouldn't mind listening to the inauguration. But some people, how people are. They're very sensitive about stuff like that. But anyways, let's talk about what we've got. So dollar index down a little bit here. Pretty big news, actually. Dollar index gapping lower here on the open, breaking this trend line that we've been discussing. Trump launched a meme coin, Lee pointing out. Let's pull it up. Trump USDT. There's like two of them, which is confusing to me, but it's this one, right? The thing is up 230% from initial launch. At one point, it was up 600%. It's come back since then a little bit. Well, a little bit, 50% down. But again, kind of depends if you got it from the beginning, you've tripled your money or whatever. But anyways, the Trump meme coin is a thing now. There's also Melania coin. It's a crazy world we live in, guys. I have no real solid opinion on that, other than when that happened, I was thrilled because it helped my Bitcoin idea, right? So Bitcoin, if you want to buy Trump coin, right, there's going to be a rush to buy Bitcoin, and other things also benefit from that hype, right? So Bitcoin has moved higher. I've moved my stop loss now into profit on this position. At one point, this trade reached 109,000. I'm still in this trade. When we had this day, I decided, okay, I'm going to trail my stop. Then we had this move, shot through those highs. I trailed my stop loss here. We came back, almost got tagged out for a profit there, and the market has swooped back up. This thing is so volatile. And again, I know there are a million people who love to trade altcoins and things like that. That's not my game. I love trading Bitcoin. It's been actually one of the most profitable things that I've ever traded. I don't short it. I just trade it long. I trade options on it through IBIT. I long Bitcoin. I like when it's moving well and there's the right environment. It's really, really quite an instrument I love trading. It trends very well. Now, I'm not necessarily like a crypto forever person. I think if you are a crypto forever person, you probably are more likely to dabble into like altcoins and things like that. But for me personally, I'm not a crypto forever person. I think it's easier to say you are now than it is before. When Bitcoin's at all-time highs, it's really easy to say, yeah, Bitcoin's the future. When Bitcoin's down 60%, it's really hard to say Bitcoin's the future. For me, I'm a trader. I actively like this position currently. That does not mean forever. And I'm willfully admitting that when Bitcoin falls, if it were to collapse through key levels, I'm no longer a believer. I'm willing to say that up front. That's why I'm a trader, right? An investor of Bitcoin says I'm a believer, and if it crashes, then I'm along for the ride. And even if it takes me 6 years just to get back to break even, I'm there, right? That's what an investor in Bitcoin and crypto and all that does. I'm not, and then more debate would be you can't even invest in cryptocurrency because it's not a tangible. It doesn't. Some people would also say you can't invest in gold. You can't invest in Bitcoin. That by definition they're like, well, it doesn't yield anything. It doesn't have any utility, true utility. But whatever you want to call it. If you're a buy and hold person, you have to stick through the downside. I am a trader. I am using price action. I'm trading the momentum. I've got this position on. It's running really, really hot. I'm also long SPX. or S&P 500. I'm trading SPY, the ETF. Nice little breakout above this trend line and looking really good, right? So I'm staying long these things. We've got a bullish confirmation on both of these charts. These have been excellent calls on the Edge Finder. Bitcoin and SPX both getting bullish readings the last few weeks. Excellent start to 2025. This has put me miles ahead of the S&P 500 out of the gate. We'll see if that can continue. In terms of my performance relative to the S&P 500 is what I mean. If I take out neutral readings, let's just see what our full list is here on the Edge Finder's top status page. By the way, did you guys see the update? Did you see the announcement? The Edge Finder is free to use through the end of this week. I don't know if you guys already saw that. We put up a video yesterday. The guys promoted it on the live stream. We did a lot of stuff. If you have not, take 1 second. If you have not already seen this, I know a lot of you guys got your access yesterday. Stop everything right now. If you do not have the Edge Finder, it is free to use right now. Click this link. It's been dropped in the chat. Chandler, if we could drop that link one more time, that would be awesome, just to put it at the bottom. Maybe we could also pin it on YouTube. If you log into YouTube and pin that comment in the live stream, that would be great. Guys, the Edge Finder is free to use for this week only. We are making it public access. All you have to do is apply using this form link that's been dropped in the chat. What you get when you try it out is the full unlimited access version of the Edge Finder, all of its tools, all of its features, and we've actively asked everybody who's trying it out this week to give us some feedback, whether you want to comment on videos or send a message on our website or whatever. We would love your feedback. We're looking for two things: feedback, and we're also looking for people who are interested in the product to communicate with and potentially buy the product later. We'll always be straight up with you when we do something like this. Obviously, this is a marketing approach. We are going to, if you're interested in buying it later, you don't have to, but if you're interested in buying it later, we'll communicate with you. We'll ask you, hey, do you want some discounts? Do you want more information about this feature? Our team is set up to actively work with everybody who tries it out this week, who is requesting more information. When you fill out this form, it will ask you, are you interested in future discounts and learning more about the tool? And if you say yes, someone from our team will work with you. So we're completely transparent, completely straight up about it. It is obviously a marketing way, but for you guys at home, it's an excellent way to try the tool for free to see if it's right for you. There's no cost. All you got to do is put your email in. Yes, we will probably send you email marketing, but you can always opt out. So there's the full transparent, approach. Maverick says, I already got one. Sweet. Very awesome to hear that. Yeah, I was thrilled to see it. I was traveling home and I was just getting comments all over the place saying, I got my Edge Finder. I'm trying it out this week. Really, really cool to see it. And I'm thrilled. You guys, I've said this many times on my streams and videos, but when everybody is like trying the Edge Finder and they're talking about it, I imagine that it's the same kind of feeling that like a songwriter, like a musical songwriter, when everybody's in the audience singing their song, I imagine that's how it feels, right? It feels incredible because everybody's like, kind of checking out your hard work. And that's obviously what we've done for the last few years, developing this tool. So that's all I ask is check it out, give it an honest chance, see if it's something right for you, and purchase it and support our work if you really like it. If you don't, all good. Thanks for trying it out and thanks for giving us some information. Lee says, I want to buy it in the stock box outright at some point. Lee, when you do that, make sure to chat with us on our website. We'll make sure to give you the biggest discount we can at the time. And hint, hint, next week might be a good time. I'm using it right now. This is awesome. Cool. Marcus, love to hear that. A powerful tool to play with. Cool. Love it. Yes, please enjoy. Please take full advantage of all of the features. Try it out. Let us know what you think. So here's my thought on Bitcoin. I'd like to see this thing take out those highs. Here comes the high. We reject it. We come back up. We reject it once more. And if we can't put in a higher low here, this is make it or break it for me on this position. If Bitcoin cannot hold this higher low at 100,000, that's going to be a good signal for me to take a profit and reevaluate the Bitcoin trade. We had an excellent entry on this trade. We ripped back up to the highs and we tested the highs. I love this setup, but we need to see the follow through. If we do not, we take profits. If we do, we trail stops further and we let that trade run as far as it wants to go. Same kind of concept for the S&P 500, which I have trailed my stop loss into profit. This is an excellent situation to be in when it comes to trading. I am at a point where it is not whether or not I make money on these trades. It's a question of how much money am I going to make on these trades, right? So the S&P trade, stock market just opened up here. Let's take a look at SPY here, which is where I have this trade on. Give me a second. Let's let that load. So here's my my SPY trade, right? There's that trend line breakout, beautiful. Got my stop loss just below market structure here. In fact, I'm gonna go ahead and mark that area just so we have it. You guys will know that I do most of my analysis on SPX500, the CFD version, just because I like the way the price action works a little bit better than SPY. But I also like trading SPY because I like being able to see the gaps. So, you know, stock market gaps are a real thing. They're really important. So I actually like trading the ETF SPY. Anyways, I'm going to go ahead and just mark in this level here. This is my key area of support, right? So this was the initial entry area, this level of support here. Let me go ahead and mark that. So this was kind of like the key initial entry area. And you can actually see what kind of happened. It actually tested my area, right? So I got long right around here, tested against me, and then shot through this area and is now following through, which is beautiful, but we need to see that continue. So as long as we can hold this trend line, like if we come back and retest, perfectly fine. Nothing out of the ordinary here, but I want to see that level hold and continue taking us back to all-time highs. If we don't, if we break support, the trade has run its course in my analysis, right? And I take a profit on the position. Now, obviously, I could give back some profit on this position if this does in fact break lower. But I'm willing to accept that I could potentially take a smaller profit. Because again, a lot of times people will watch my videos and they'll say, Nick, why don't you take a profit right now? It's up, it's breaking out. Why don't you close? Well, the second you close and you think you've caught and been so smart, you've caught the market perfectly, that's when it does the real move, right? And I'm not saying this is what's going to happen, but it could happen. And I've seen it often enough that the second you think you're closing out high, the market goes much, much higher, right? So I want to stay in this trade. I want to give this trade a chance to run. I'm not a purely technical trader. The S&P 500 is getting a bullish reading on my systematic approach using the edge finder. When looking at economic data, most things are pointing towards the US economy continuing to be strong. The trend is still to the upside. Seasonally, it's a decent time to stay long. Commitment of traders data, a little bit mixed here. Retail positioning, not so great. Put to call ratio is what we've started using for this. And put to call ratio is signaling. In fact, let's go look at the put call ratio. Put call ratio here recently for SPX is showing some heavy interest. In fact, I actually wonder if this is an error. If we take a look at this, I'm going to ask the team. This is going back couple days. It looks like we're missing some latest data, but check this out. If you guys also, I want to just move this because this is going to bother me. We're going to slide this bar right over to the edge here. So check this out. If you have the edge finder, check out this new put call ratio. What you might be on the free trial week, by the way. Again, we'll drop the link. If you're just tuning in, the edge finder is free to use this week only. Use the link being dropped in the chat if you do not already have your access. But the edge finder, what we're looking for, and here's that link, by the way, just dropped it in the chat for you in case you do not already have it. So, okay, look, if this thing is very low, what that's telling you is that there is a lot of greed out there and there's a lot of confidence in the market. And that is the case right now. People are very enthusiastic. People are very bullish on markets. Whether you like Trump or not, a lot of his less taxes for corporate businesses, less regulation, is initially looked at positively by the market. What might not be so positive could be the ramifications of tariffs and inflation, yada, yada, yada. That could be a negative, but it's a could be, right? We don't know. What we do know is less taxes are straight up good for businesses. That's why I think the path of least resistance here for stocks is higher. NASDAQ pulling back here a little bit. But again, very nice bounce off of this area and actually breaking through that downward trend line that we've recently been discussing. Let's see if we can hold that area, right? That would be a really good indicator today, is if we hold this area and actually scoop those lows and continue, that'd be a really strong signal for stocks, I think. Do you think we're pushing for new heights? Yes, I do. I think we are likely to see new highs in the S&P and the NASDAQ, pretty soon. Now, when I say yes, I think we are, it doesn't mean yes, we definitely are, right? Because I've been so wrong on YouTube so many times. And if you walk away from this stream and next week the S&P 500's crashed, what I don't want you to do, you can do this. You can say, oh, Nick was wrong, he's an idiot. I don't care if you do that. Do that all you want. What I don't want you to do is place your faith in anybody you see on the internet to know what's going to happen perfectly in the markets. Nobody knows the future. Something could happen. China could say something. Russia could do something. Corporate earnings could come in really bad. Something can change the story at any moment. That's why markets are hard to predict, right? But given the current outlook that we see, most likely for me, I think we do continue higher. If I'm wrong, so what? We'll use stop losses and we'll control risk. If I'm right, we can make some money, right? That's the idea, right? That's how I approach this stuff. So it's all educated guesswork. That is all good trading is educated guesswork. I have a long position on the S&P 500. I have a stop loss in place in case this fails. If we fail out, we stop out and we take profits. And when I say take profits, I am in a profitable position and my stop loss has been moved from initially here up into a profitable position. So even if I get tapped out of this trade, it's going to result in a profit. Hopefully that makes sense. So yeah, this has been, so what I'm doing also when I find trades, how do I find trades? I always look at the top setups page and this is basically my watch list. Specifically, I don't usually trade minor currency pairs that often. So if I take minor currency pairs off, this is really my list. So if we take a look at for currency traders out there, still looking strong for the dollar, I would say. And if we take a look at, for example, let's look at pound US dollar, right? Pound dollar, I believe, had inflation data that came in light this morning. Inflation data came in light. We're kind of bottoming out here, at least for now, but we've got this very strong downward trend line. I would not be surprised if we drew in this level here. I would not be surprised if the pound dollar found some selling pressure right around this area of resistance. So as we come up off of these lows, we had a really pivotal breakout here for the pound to the downside, a retest of that area. Educated guesswork would tell me most likely we continue the downtrend until further notice. How are we getting such a strong reading on the Edge Finder? Well, we can do a really quick breakdown. The commitment of traders data shows institutional money is very much favoring the US dollar over the pound. And if you don't trust me on that, you shouldn't trust anything anybody says on the internet. Look at this. If we look at the latest commitment of traders data, which again, you can access with the free Edge Finder week, we'll drop that link once more in the chat. I'm going to be annoying with that. But please try out the Edge Finder this week. It is free to everyone who's watching the stream right now. The pound is kind of 50-50. Actually, it's like right on the dot. 50-50 long to short positioning. The dollar, 64.36%. What are we talking about here? Percentage of contracts, long versus short, favor the long side for the US dollar on the commitment of traders data. What is the commitment of traders data? It's institutional positioning, hedge funds, banks, large reporting entities that have to file and report their positionings on a weekly basis. We track that data, we showcase it within our software. It is one of the most popular pages because of the way that we do it. You can see COT data all over the place, but the way we demonstrate and showcase COT reports are what our customers love so much. People love our tools because of the way we've outlined this. We've listened to the feedback of the community on the commitment of trader stuff. We've built what I think is probably the best thing on the internet for showcasing and understanding the commitment of traders data. Here is the latest weekly COT filing. And what I want to show you here is that in the latest report, the US dollar saw a significant decrease in short positions, that's bullish, and a significant increase in long positions. That is also bullish. So very strong reported week for the US dollar, right? So when we look at this, we say, okay, that's very bullish for the dollar. And then we could say, well, what about the pound's latest report? Look at this. These two things are on opposite extremes. The pound on a weekly basis, on a weekly report, latest weekly report, long contracts decreased, short contracts massively increased. You guys see this? Does this make sense? Type yes in the chat if that COT breakdown right there made sense and was helpful. We look at the commitment of traders data all the time on the live streams because tracking what institutional money is doing can be very useful. And this is, you can see these trends that play out, right? Big money oftentimes is on the right side of these excellent moves. And guess who's on the wrong side of these moves so often? It's retail traders. Retail traders are usually on the wrong side of this position. Let's actually look at retail sentiment history of the pound US dollar. We've got this data. You guys know we come heavy with the data. So check this out. Retail has consistently, this is the net retail positioning, long positions minus short positions. You can see that as the pound, this white line, guys, is the price of the pound US dollar. Price has been going down. Retail has been doing what? Buying, buying, buying. They're consistently buying a downtrend. So institutional money is riding that trend, not trying to be a hero, just riding the trend. And retail is trying to be the hero, trying to call the bottom. And lo and behold, what do we have here? We have a downward trend that retail has been losing money hand over fist, and big money has been trend following and making a lot. Understanding sentiment and positioning is one of the core principles of how the Edge Finder scores assets. So when we see COT column, this software is automatically reading the commitment of traders report and it's generating bullish and bearish readings for each of our favorite symbols. Hopefully that clarifies that a little bit for active Edge Finder users or people who are trying it out for the week. That's how that column gets calculated. All of these columns are automatically filtering data, studying it, and generating a score here. I'll say it again, if you have not already applied for the Edge Finder free week event, it is now until next Monday. You can play with our software 100% for free. If you have not already taken advantage of this, within 49 seconds, you could be pulling up the Edge Finder. Actually, I'm going to give it a look. I bet you, someone do this for me. Tell me how long it takes you. Click the link. We'll drop it as soon as the link drops in the chat. Apply for the Edge Finder free week and tell me how long it takes you. My guess is it takes you my actual guess, 1 minute, 57 seconds. Time yourself, but you guys can play with the Edge Finder all week. That's the point. It's free to access until the end of the week. 10 seconds, you're wild for that. Absolutely wild. I could not do it in 10 seconds because it's got to send you an email. It sends you the link. So unless you've got like a lightning fast internet speed, less than a minute, it's pretty good. Yeah. Point is, try out the Edge Finder. That's the whole point of our marketing, sketchy, gimmicky. Somebody got so mad at me, guys. They're like, somebody commented on the video announcing that the Edge Finder free event was taking place. Someone said that, or someone got so mad. They said, Nick, this is a scam. You're obviously collecting our emails and never going to give us access to the Edge Finder for the week. And I was like, dude, number one, obviously we are collecting emails. Like, obviously that's what we're doing. Nobody would try and say otherwise. And number two, absolutely you can access the Edge Finder for free. I'm not what would be the benefit to just absolutely outright lying? Hey, everybody can get the Edge Finder for free, and not one person. My comment section would be a landmine. It would be a minefield. No, you're very welcome. And again, I do genuinely, even if you don't buy the tool, I would genuinely appreciate your feedback. We read comments all day long on this stuff, on the YouTube channel, on our email, on our website, DMs. We get constant messages, and our team is constantly reading them. And your feedback goes a long way. So if you have a thought about the Edge Finder, what we can improve, please feel free to drop it. We do genuinely take that into consideration when building new features and trying to improve it. So let's keep watching Bitcoin here. Bitcoin's at 103.6. Ethereum, I don't know why, but Ethereum's price action just does not feel like it's playing as nicely as Bitcoin. What's the, is it Solana? This one I think was like ripping off of, because it wasn't like the Trump thing, Trump coin, like done over the Solana network or something like that. Solana on that same day jumped 20%, which is insane. You want my email in order for me to, yeah, exactly. You're welcome to my email. Yeah, I mean, again, we will send you an email with probably like future updates, announcements, and discounts. But if you don't want them, no worries. Just unsubscribe from the email list. On every single one of our emails, there's an option to unsubscribe so that we don't bother you if you don't want to be bothered. Totally cool. I remember trading Solana at $150. Yeah, now it's at $240. That's crazy. Crypto has had a wild turnaround in recent years, man. S&P 500, here we go. Nice little, I love this candle here. So a lot of times when you watch like traditional candlestick patterns, they will say something like this. They'll say, and this is why I'm not purely a technical trader, they'll say this candlestick pattern doesn't mean a whole lot unless it's at the end of a move, which is fair. Like if you said like right here, like obviously that was the end of the move. That kind of like pin bar looking candle signed a pretty good signal of a reversal, right? I would actually argue that this kind of candle has good indication no matter where it goes. Like for example, look at this. Same candle, middle of the move, continued higher. Now you had two of those candles back to back here. I love those kinds of reversals, especially in indices. Indices, when you get these long wicks on the bottom, they're really, really powerful. It signaled the bottom of the August 5th. And I think it's a bit of like a capitulation move. And I think a lot of people who are like short immediately like cover quickly when it starts ripping back up. So I kind of understand the logic, but for the S&P 500, this candle, if it were to close like this today, looks really solid. Interestingly though, look at the divergence. Nas down 0.5% and S&P is flat on the day. Give me 1 second, guys. My cat wants to get in. Guys, this is Luna. She is my little friend. She hates it when I close the door on her. But then once she's in here, she wants to go back out. So I have to leave the door open. Anyways, Luna is a day trader. She scalps. Wait, you have a Luna too? Yeah. Apparently, Marcus, that is the most common like female pet name. Luna. Yeah. Gold's up 1%. Oh, we got to talk about gold. I have not even talked about gold. Look at this. So you want to talk about something I was wrong about? I mean, I guess I wasn't really wrong because I didn't take a trade on gold. But the other day, I said, I think that gold has a stronger probability of coming back down from these 2,700 levels. And I think we stay range bound. I might have been wrong about that. Let's go look at the Edgefinder score on gold. So it's not on a top setup. So if I include neutrals, and let's do this, let's just do metals for a second so we can look closer at gold. So gold is getting a +4 reading. What's interesting about that is that a +4 reading is 1 away from getting a bullish bias on the Edgefinder. GDP numbers, PMI numbers, those came in strong for the dollar, which are negative catalysts for gold. Retail sales missed. I don't know if you guys saw the new US economic heat map. I'll look at it in a second. Labor data has also been strong. Like, here's my issue with gold. What's holding me back, quite literally, because this is how I trade, I look at the Edgefinder scoring system. Economic data for the US, very strong. It makes me more interested in industrial commodities, copper, platinum. And it makes me more interested in indices. This is my issue. When do you want to buy gold? Well, you buy it when you want, but I want to buy stocks. You have a choice, right? Stocks, gold, bonds, they're competitors with one another. If the economy is good, look at this. If the economy is strong, do you want to buy a safe haven asset or do you want to buy a growth-based asset? I'll tell you where I'm going. It's going into stocks. If something changes, and it could change, if something happens to the economy and we see the opposite case happen, where do I generally want to be? In gold. When our system picks up on growth in the economy, it goes more towards stocks. And when our system, the Edgefinder, picks up more weakness in the economy, it goes more towards gold. By the way, this is typically, how also we could swap out for most indicators here, the dollar, when the economy is really strong, the dollar is strong, and that's not so great for gold. And when it flips, right, gold, when the economy is down, right, the dollar weakens, gold strengthens. So if you ask me, Nick, why aren't you trading gold to the long side? We've got beautiful breakout. Well, we do now, but we've sat through like months of just stagnation for gold's price. I think some of this is also in response to, okay, we've got Trump back in office, and maybe some of the stuff that he's been saying is a little bit worrisome for geopolitical stuff. I know he announced he wants to do 25% tariffs on Mexican and Canadian imports. So maybe there's some drama there. But the point is, when we look at gold here, price action looks pretty solid. Not going to lie. We've had a nice potential breakout here starting to form. And if we close like this today, technicals look solid. In fact, technicals on the Edgefinder are not our issue. Edgefinder is giving it a +2 for trend. Trend is to the upside for gold, at least the way we calculate it. We use moving averages on the daily chart. We're getting a strong trend to the upside. Cool. Where we're losing points for gold is the strong economy component. And this is important to the story. So for me, I'm going to watch gold. And if something cracks, if GDP numbers, if PMI numbers, if those numbers materially weaken, gold is back on the menu for me. But let's stay systematic, right? Let's not, I get it. There's a lot of people who are purely technical traders, but this is probably not the perfect stream for you. If you're a technical 15-minute chart trader, it's probably not the stream for you. If you're more macro focused, if you're more real world focused, like what's really driving prices, this is probably the stream for you. And in this stream, we look at what the economy looks like. And one of the easiest ways to do that, especially if you're trying out the Edgefinder for our free week this week, is to check out the US economic heat map page. This page will allow you to look at the US economy. And I said I would do this on Friday, or Thursday, but I left the state for that bachelor party that I went to. So look, this basically, blue readings basically favor risk on, red readings favor risk off. And that's what I need to clarify here a little easier. Instead of all this text, I feel like this is a lot of text. I'm going to condense it and basically said red readings favor a more risk off environment and blue readings favor a more risk on environment. We had weaker or cooler inflation data. That's solid for the risk on story. Most of this stuff is still blue. So most of this stuff is keeping me long stocks, long Bitcoin, etc. But you guys know I'm going to be watching this heat map like every day to keep an eye on this. Because if it changes, then I could change to, okay, I'm staring at gold and I'm looking for longs. But right now, I've made a lot more money trading the indices long, trading Bitcoin long in favor of a risk-on environment. I've made a lot more money than sitting around waiting in gold. So gold's starting to look good. But again, I'd rather be late. I'd rather be late with good signals than just taking a technical breakout just because it's breaking out. I don't love the full story for gold. It's close. You get some weakness in the economy, I'm probably long in gold. But right now, I'm just not quite there. Technicals look great. Nothing against the technicals. Just, I'm a systematic trader. I use the fundamentals. I use the macro to influence my decisions as to whether or not I go long or short. And sometimes it costs me trades. But most times, when I'm aligned with the fundamentals, I make way more money. Nick, are you adding heat maps of other economies in the future? I've had a lot of requests for that, so yes, we will be. Yes, we absolutely will be. At first, people were like, are you going to add Europe? Are you going to add this, that? And I was like, yeah, maybe we'll put that on the list. But we've had an influx. People obviously love the US economic heat map for good reason. It's a simple indicator that is very powerful. But we've had enough requests for other countries that I'm going to, with my team, put together probably a Europe economic heat map, probably Australia. I don't know. We'll have more stuff. If there's one thing I can guarantee everybody who's watching the stream, more and more data will be showing up in the Edge Finder. More and more data will be accessible to our customers who use our software. So I mentioned this like 1,396 times already, but if you would like to try the tool for a very, very limited time, the Edge Finder is free to use to the public. All you have to do to try it out is click the link being dropped in the chat, fill out the application, and within 1 to 2 minutes, you will already have the Edge Finder in front of you. If you want to play with the data, look at the Commitment of Traders report, look at the data screeners that we've built. This is 2 years of hard work between our whole team here at A1, and we are nonstop. We are coming for you. If you have a software on the market, we're coming for you. We're going to be the best fundamental macro software tool on the market for the average everyday trader. Not Bloomberg, which is $20,000 a year or whatever it is. We're making this accessible, and we're making powerful tools for fundamental traders at home. Yeah, that's the goal. I think that'd be really cool. Everybody's seeing the next one, easy to do, is probably Europe and UK. We could probably get within, I'm not going to give you a timeline because we got so much stuff going on at the office. Within a few days, within a few weeks, we'll have more economic heat map stuff. Trading positively correlated assets is risky, I think. Great point, and yes, you're right. 20K per year for a tool is insane. It is. I understand it though. Data is expensive. Teams of people to manage data, very expensive. And Bloomberg is not necessarily targeting the average retail investor or trader. Bloomberg is targeting hedge funds and institutions that have a ton of money to allocate towards research. So I understand it from Bloomberg's perspective. I'm not, bashing Bloomberg and their terminal. It's an excellent piece of software. But for us, we found a niche that we love serving, which is the sophisticated at-home trader investor. That is our target audience. That is what keeps us in business at A1. Nick, I got Weeble and I'm lost. I'm trying to trade with $200. Neuer, if I have a couple videos, if you look up on YouTube, Trader Nick Weeble, you'll see several of the videos that I've done just exploring the platform and how to navigate it. Hopefully that helps you out. Trading positively correlated assets is risky, I think. Yeah, I mean, it is. So very risky actually, because a lot of times people do it and they don't know they're doing it. If you have a long position on the NAS and you have a long position on the Dow and you have a long position on the SPX, you really just have most likely 3 correlated positions. So if the market, let's say you're short, the market rips, all 3 of them are going to rip, and you're going to take a triple-sized loss. Nick, how was Florida? It was great. Really, really fun. I talked about it earlier. I'll give you guys the update on the Florida trip really quickly because I gave it to you earlier. Somebody asked for SMH. Christian, I'm so long SMH as well. I need to probably manage this position. Yeah, I need to, at the very least, trim my stop here. Where do I want to put this? I think I'm going to put my stop right here. This trades, I'm going to do this. Okay, so stop is trailed on SMH. And now I have to update that. So bear with me, guys. Give me just a second. I will, Alan, give you the Florida update. Long story short, it was really fun. I'm not a club person. I just do not like clubbing. It's not my thing. I think everybody who clubs is beneath me, and they're lame and stupid. I'm absolutely kidding. I do not club shame, but it's just not for me. It's a lot of here's my, maybe this is a hot take because some people love to club and there's nothing wrong with clubbing. Like if you enjoy it, do what makes you happy. But when I get together with all my friends, my issue is I want to like speak with my friends. Like but I'm also almost 30. So give me a break before you say, no, you're just a boomer or a millennial or whatever. I kind of like the idea of hanging out with my friends, going bowling and having some beers, or playing a board game night with friends and having some wine. Like, trust me, I like to get down, but I don't like clubbing because then I just can't hear my friends speak. Like, I feel like we're just like mindlessly bouncing around in a club as opposed to like doing something fun. But that is my boomer millennial take on it. And I totally respect if you like it. It's just not for me. I can see why it's fun. If I'm really tipsy, which I just don't get very often, I could see doing it and having a lot of fun. But I don't like to get to that stage because the next day I hate myself. I like tipsy, not belligerent. Anyways, that's my hot take for the day. Am I wrong for that? Do you guys agree or disagree with that? Clubbing, are you pro clubbing or against clubbing? I'm also updating my position. For those of you who are in Discord, I am going to trail my stop on this semiconductor ETF play that I'm doing. 250.74, 250.74, trailing my stop slightly into profit after the recent run up. Semiconductors. Stop just below swing low support zone, as shown in image. Okay, so SMH trade update just got sent out. I'm still long semiconductors, and I think it has more room to run, but I need to see it break this level to stay in the trade. If we come down and break this, small profit. If we break through the highs, excellent. We'll let that winner run. James says I'm retired. Clubbing after 30 is weird. Yeah, so I prefer to chill rather than clubbing. I think I'm not alone in this. I feel like most people are like they'll go. I'm not like, oh my gosh, get me out of the club. I hate this. But I'm like, this is just not my thing. Like I can have a drink and have fun at the club, but I'm not the guy that like at the club goes wild. That's just absolutely not me. I can see having fun with it and enjoying it, especially when you're like 22 and getting in that stage the next day doesn't kill you. But pushing 30, I got two cats and a wife. Like the risk to reward, you want to talk trading terms, the risk to reward on clubbing for me no longer makes sense. It's kind of like massively over leveraging when you have a large trading capital size. What are you doing that for? Right? You don't need to do that. Just trade slow and steady. Slow and steady for me at this age means wine nights, sitting on the porch with my friends, if I'm going to do some drinking. 2 whole cats, man. That's what I'm saying. And one of my cats could be a cat and a half. He's a big guy, okay? One of them, the little one, she's up on the ledge. She's a small one. But the guy one, oh my gosh. Let's just say this. We had a house party. Speaking of which, that's how we like to get down. Like a housewarming party around my birthday. And people came over, and one of my closest friends said he said that's one happy ham. And I was like, that is the perfect explanation for him. He's a happy ham. Okay, so S&P 500, NASDAQ, giving back some gains here. Here's the NAS pulling back. Again, I'm really not too worried about these indices at this time. They still look very strong to me. But with that said, stops are in place on SPY. Most likely Bitcoin's probably giving back some gains here this morning too. And I just locked in something on my SMH trade as well. So we'll see. What's your opinion on upcoming unemployment claims and PMI? I don't usually have like a forecast for economic data. I usually just trade the aftermath. So if unemployment claims come in, last time around, what were they? Unemployment claims missed, well, higher than expected by 7K. So not a huge change. But this time around, we'll see what it comes out to. I'm kind of willfully backward looking with economic data because I know that most likely a lot of this data, although yes, we're looking at like, oh, CPI was last week, that data is still very relevant today. This summation, this perspective is still relevant even if the data is not fresh from this morning, right? And what I mean by that is just because we didn't have an NFP report this morning doesn't make the previous NFP worthless. That data is still very useful. We had a very strong NFP report. That factors into today's environment. This almost could be called the US environment heat map. Yes, it's the economic heat map on the Edge Finder, but it really is like the economy summarized. The best way we know how to do it. Check oil, Nick. It looks interesting. Yes, you were so right. I need to check oil. It's been an oil bullish reading on the Edge Finder for a while. And if you've caught that trade, then I'm jealous. I have not been able to get this entry on oil, but we're getting close. This 50% retracement is probably where I take a stab at a long position on oil. I have one position already on ExxonMobil, which is a stock that has come back from the dead. This trade at one point was down 7% for me on my holdings. I have 100 shares, so you could do the math at what I was down at one point, but we're almost back to break even, floating a negative $100 loss. So pretty much break even on this position. Bitcoin losing some steam here, trying to find its next move. Bitcoin, I believe, is still a bullish reading. Yes, very bullish reading still on the Edge Finder. This has been call of the year so far. to stay with the Bitcoin trade. I closed early. I didn't let it run. That's tough. Hey, Nick, would you mind sharing in terms of percentage you would allocate your monthly income to build up capital monthly, as well as how much you finance your personal life simultaneously? I'm not Alec. That's a great question. So I am a small business owner, so my income massively varies. Some months I make great money, other months I don't make that much money, right? There's a lot of cost to running a business. So my income looks like this, right? It's positive every month, but it varies. So I couldn't really give you like a hard percentage. But what I personally do, I'm a new homeowner, so I'm paying off mortgage. So a lot less of my money right now that I make from my day job, aka A1 trading software sales, goes towards just like working down my mortgage. But I would say, generally speaking, for personal finance, like everyone here, you should just consider paying your needs first, and then right behind needs, in my opinion, comes your investing. And if you're truly treating trading with respect, it's about the same as investing. So my opinion would be, take what you need from your salary, from your day job, and first of all, abandon the idea that you're going to quickly quit your job and trade for a living, because that is what destroys people financially. They're like, oh, I've had a good month, I'm going to quit my job. Don't even think about that. I still have a day job, kind of by choice. I love doing what I do. I love building software. I love YouTube streaming and all that good stuff. But that's my day job. And I think everybody should have a day job and continue to trade until you have so much, capital that you're just able to easily live off of it. Take the stress out of your situation. Don't try and trade for a living too soon. It's one of the easiest ways to mess up your mental state. At one point I traded, there was a point where trading, and I had 1 gig for a brokerage. I was doing internal content for a brokerage. This was back in like 2019, I think. And they were paying me a couple $100s per week. And I was trading and had a very small YouTube channel at the time. And that was still very stressful. So, my opinion is, first of all, set up yourself so that you don't need to make money every month from trading. It's really important, because then you'll trade better. Like, it's just psychologically, if you don't need that money today, you'll likely do better in trading. Some people might disagree and say that added pressure is good for them, but I don't think added pressure in trading is good. In other areas, absolutely. Like in other areas of life, added pressure might be good. Like, oh, I got a wife and kid I got to figure something out for. But for specifically trading, I don't think that that's really true. It's not like a lot of things, because you can't control what the market does. So I would not encourage you just to quit your day job until you have ample capital, significant experience, and even a 1 to 2% average monthly return is more than enough for you to live off of. Until that is the case, I wouldn't do it. In terms of allocating money towards growing trading accounts, if you're going the old-fashioned way like I did, not going the prop firm route, just investing steadily into your trading account, and treating it with respect, like a long-term savings account, I think of trading as an advanced savings account. If that's how you're treating your trading, when you're finished paying off your debt and your income or your expenses for living, treat your spending money, like take a good chunk of whatever you're going to spend on stuff and just invest that instead. That's what I did, right? I spent as little as I possibly could on myself and invested in my trading account. That's my opinion. That's how I did it. Everybody's situation is unique to them. I also have a background in software engineering, so I had a major advantage in terms of, software engineers make good money. So I made good money right out of college, and I was able to shovel a lot of that away into a trading account right off the bat, which gave me capital. So everybody's situation is different. So where there's a will, there's a way, you know what I mean? Anyways, S&P 500 back to flat, really not going anywhere so far today. I think the week is just going to be volatile, man. Like, with Trump newly in office, there's just question marks in every direction. But I'm going to do my best on the channel to just stay up to date with what kind of fiscal policies are coming into play. Like I mentioned earlier, the Canada-Mexico import tariff, 25% thought process is kind of our start there. That's one of the key things that came out of the gate. There was a lot of stuff that happened yesterday. To be honest, I was getting back from Florida and did not fully watch everything that happened with the inauguration and what happened with day one. So I'm gonna have to go do some research myself before I really talk too much about it. But just know that volatility is likely to be high as we kind of get a picture of where the Trump administration wants to go. I think 2025 is going to be different than 2024 in the sense that in 2024, there was little focus, except towards the end, once we knew Trump won the election. There's little focus on fiscal policy and everything was on monetary policy. I don't know why my broker just logged me out. But I think 2025 is going to be a shift. We're going to focus a lot more on fiscal policy and maybe a little bit less on monetary policy. So yeah, you've preached a lot today. Can we get to trading, please? No, in fact, my time is up, and it was nice seeing you, and have a great rest of your day. I'm just kidding. I went through some charts. I would encourage you to rewind a little bit, watch back. But yes, I did a lot of preaching today, and if you didn't like it, then I'm sorry, and I still love you. Anyways, we're going to take a quick break. Before we do, just a reminder, guys, if you want to try out the Edge Finder, it's free this week till Monday. We're doing a Edge Finder free week event. All you have to do to get access is click this link. And in all seriousness, for more analysis, stay tuned. I'm going to do some more research on the Trump stuff here, and I'm going to put out a video this afternoon. So I'm about to go do that, but you're in good hands. We got a serious heavy hitter taking over the stream. It's Chris Pulver, and he is coming in just after this quick break. We'll be right back.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Welcome back to some live trading today. We are sitting here 522.01 on the QQQ, flat on the day. SPY slightly up on the day. We got some interesting gaps here. This market has ripped pretty darn hard to the upside since the lows on the 13th of January. And I'm looking at some pretty impressive gaps. So we are not quite there filling the gap today, but it's going to be pretty darn close. And I wonder, are we going to kind of slowly pull back into fill today's gap and then offer some support? I am liking some trades that give me some flexibility and wiggle room to let price fall but still make money. That's kind of where my head is at. I honestly over the weekend consumed some pretty interesting podcasts, and I thought, you know what, maybe this market is now, since it's official, Trump is president, maybe that like first burst of optimism is still going to hit the markets. But we are, I don't know, we're seeing like very typical Trump action, which is every day there's going to be something from Trump, every single day. And if you think that's not the case, then you didn't remember 2016. So it's already on the calendar for what, tomorrow or Thursday. So we've got him speaking at the World Economic Forum. Hyperbole, superlatives. Let's see what he's going to say. You're going to have tweets every single day. I mean, Elon Musk couldn't be any closer other than being an actual like cabinet member or in the executive branch. But anyway, it's going to be pretty nuts. I don't know what's going to happen, for better for worse. But let's take a look at the main things, right? I mean, this market has clawed back in a pretty nice way. I was thinking that this is still kind of a bull trap situation where even if this market does go higher Okay. I'm not really buying like big momentum bursts to the upside. I could see this market, getting back towards the highs, but struggling to hit those highs, or struggling to get there. And we still have a FOMC resistance point that the market can't break. And we're right there. So the trades that I'm looking at right now are taking in, those income trades we talked about a lot the last few weeks, where I'm doing like a 1-1-1 trade, or sometimes I'll do a 1-1-1-1, which is basically it's a bear put spread and a bull put spread, and I have a profit trap in the middle. I take the trade for a net credit. I like that trade a lot. If I want to own the underline, I'll still be willing to own the underline if price were to fall a bunch. Out of Mag 7, and there's a nice little market breadth that's happening right now. If we take a look at the advanced decline line, right now we have about 70% of stocks advancing, right? Which, again, rotating out of the top 10 and rotating elsewhere. We look at the sector performance so far. I know it's only a few weeks into trading, right? It feels like it's the first week of trading, but we've already had 2 full weeks of trading. But now Trump is officially president. So we have 10 out of 11 sectors. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. So 10 out of 11 sectors green on the year so far. And the big run has come out of not necessarily big traditional leaders in the markets. So energy making the big run this year, outpacing the S&P quite a bit, out of the gates almost 10%. Financials up a decent amount. And then we come into industrials and materials and utilities. Now, I'm not exactly sure, what holdings I'd want to have some exposure to. You look at some of the familiar names in the face. If you go to industrials, you're looking at GE Aerospace, you're looking at Caterpillar, RTX, Honeywell, Union Pacific. So, Uber's in industrial holdings. That's interesting. I do have a 1-1-1 trade on Uber, or ratio spread on Uber, which I'll take a look at here in just a moment. So that seems like completely out of place for that stock. I mean, you're talking like Boeing, like only airplane maker in the game. It's essentially government subsidy. Union Pacific, you like railroads. There you go. Honeywell is, kind of a household name in the space. RTX, Caterpillar, always with construction, global growth. GE Aerospace, which they switched. That was a break off. So you've got GE Aerospace and GE Healthcare, which is GEH. Those are split off. So if you want to trade stocks individually, you can look at kind of the bigger indexes, look for some liquidity. But so far out of the gates this year, we have some pretty big names. Uber's already up 11.64%. We got the other ones up, 4, 6, and 9% respectively. So why is industrials leading? Stocks like that. Let's take a look at materials. Okay, look at your weights. Why is Lind PLC 21% weight of material holdings? It's already up 4% for the year. That's a massive holding, though. I would look at the stock, but it's a $418 position. I don't know if I love that much. Sherwin-Williams, Air Products and Chemicals, Ecolab. Now, would I trade these? I suppose I would trade these if materials, like Freeport McMoran is copper and gold. All right. I think gold is a pretty decent play. Copper is a pretty decent play. There's some resiliency there. There's some bullishness there. But I would have to dig deeper fundamentally in the other ones. Like, are they going to benefit from, AI infrastructure? Are they going to benefit from any type of energy infrastructure, any type of energy reform? Maybe, I don't know. If they don't, then these would probably be stocks I wouldn't necessarily want to have. You can always have exposure to just the sector, because if any of these stocks go insane to the upside or insane to the downside, the sector would reduce the volatility because we do have weighting here. But also, if something performs very well, then we could see that also, lift the sector as a whole. Okay, and then lastly, we'll look at utilities. Again, large weights, Next Era 12.06%, Constellation Energy 8.2. Look at this. Okay, your biggest holding as far as the weight of the utilities sector is down for the year, while Constellation at 8% is up 41% for the year already. Why is that? There was some partnership with Constellation Energy, and I don't know if it was a mega cap of a Mag 7 or NVIDIA. I'm not really sure, but I want to say I've seen Constellation Energy Corp in some headlines with some type of AI infrastructure play. But that's part of the reason like utilities is up 4.16% is probably because this stock is up 41% for the year. Okay, Vistra Corp up 23, almost 24% for the year. We had some pretty big movers out of energy. But again, this is going to be conservative, lackluster, lower volatility than just trading the stocks. Now, people can pick their poison. If you want to be higher volatility, higher risk, then you can be a stock picker. I'm personally not in love with being a stock picker when if I want to eliminate volatility or reduce volatility, it is better for me to play sectors, better for me to play indexes. And that's what I'm doing a lot this year. Okay. All right. So we're trading at 600. We're up about 0.47 on the SPY. We're up 0.18 on the NASDAQ. The Dow's up 0.71. Look at that comeback on the DIA. Good stuff there. Russell also making a nice little comeback. Now that we have taken out this recent high, we are pulling back into this kind of big FOMC candle pocket. So could we see upside here? Any type of pullback is, kind of buy the dip on small caps. I'm not sure if anybody is tracking Nancy Pelosi, but she did buy some. I think TEM was the ticker that popped up today. Tempest AI. And we're showing 35 to 46. It's already up 11 bucks. You'd have to follow like a quiver quant. I've got unusual whales here. I can see if I can find the flows, see if I can find some flow data. So let's go dark pool whales, insider trades. There's something in here. Let's see, option chain, seasonality, analyst ratings. I think I'm just going to go to whale feed and see if I can find a ticker for TEM. So you got intermarket sweeps going on. These are all buy levels. I mean, these premiums are pretty solid. So these all happened this morning. That's kind of crazy. I mean, this is a lot of money getting thrown in to TEM. I mean, look, the stock's already up. But I'm curious right now. Let me look at it fundamentally. So TEM. Where is it? Tempest AI. All right. So, everyone loves Nancy Pelosi because she is making money hand over fist since COVID. But fundamentally for the stock, I mean, okay, you've got forecasts to grow. Price is going to rally. That's good. Major insider selling. Okay. Currently unprofitable, not forecasted to be profitable. Okay. And then volatile share price. That's enough for me to say, outside of maybe an inexpensive ratio spread or something for credit, I probably wouldn't touch this thing at all. And I don't know what the premiums are. I don't know if it's optionable. I have very little history on it. This goes back to June of 2024. I mean, that doesn't get me excited about this stock at all. But I'll take a look at it. Are there options on it? Let's find out. So TEM, Tempest AI, trade it. We do have some expirations. If I wanted to have, we're trading at a 97.1 IV rank, which is good. That should be decent for selling some premium. Could I do something back here in the low 30s? Let's find out. If I went out 60 days to March, I could do this little guy for 30 bucks. Really? Let's try this. I could do that trade. I could do that trade for $125. And again, this isn't even liquid, man. So I've got a bid price at $220, $1.10. If I got $1 out of this, I'd be willing to take the trade. So probability of profits around 77%. The ownership price would be 30. I'd have to be willing to take ownership here. It's about a 12% chance of assignment. But I wouldn't really take this trade for less than $1. Let me see if there's another way to do it. Nope. I don't like the 1-1-1 style here either. It's a debit on that trade. Unless I did this. 2 cents credit. Nope. All right, never mind. I don't know. The other way would be like just to establish a synthetic position. If I wanted to buy, a deep in the money call, and then sell against it and create a diagonal spread, maybe that's one option. I just feel like the option prices are not going to be that great. So I'll just let Nancy Pelosi have this one. I don't care. I'm not going to buy the stock. I'm not throwing money at it. I don't like the ratio spread. It doesn't give me anything that I want unless I can get a buck for it. Like I said, that's the only trade I'd be willing to do is if I did a buy the 35, sell the 30 for. I mean, this is a little bit better, but now I've got to be willing to take on 300 shares, which isn't the end of the world. 300 shares at $30. It would be a break even of Simon at 30 minus 5 minus $1.50, let's say. I mean, I'd own the shares at $23.50. So there's an income trade. So I get 150 bucks on the trade. It would tie up if I go to a IRA account that's going to tie up about 10 grand. So worst case would be a cash account. Let me go, not that one, this one. Yeah, 5,800 bucks would be my tie up. If I did a portfolio margin account, it's going to be a lot less than that. That tie up about $1,300. So would I like this trade enough to take it? Probability of profit around 82%. Chance of assignment around 12%. It's not bad. Okay. I don't like it that much. I mean, obviously I rate up and I'm like, well, that would be an easy 150 bucks, you know? But I'll pass on it. Whatever. I'm not going to chase, man. That is like total FOMO. And oh my God, Nancy Pelosi. It's like, I don't care. I don't care. All right, let's go back to the top down. So equal weight, doing better. I have equal weight RSP. I have QQQE. All these are looking pretty darn good. My dollar cost averaging's faring nicely. Russell again back above 225. I'm getting it called away in March if that's the case, which will be fine. I also have some income trades on IWM that I put into the pulver alerts. Russell VIX is down to 15 and change. We'll see what happens on the VIX. If the VIX comes down into the low teens, then I might look at a long play for the quarter. If we just stay here right around like 15, but we're kind of chopping around between 15 and 20, just expect some volatility. That's all. SVXY. Could I do it? Let me try this trade here. SVXY. This one might not be a bad play. 29.6 is a little bit higher IV rank than the indexes. If I went out to March, let's see what this one looks like. If I buy, sell, and would I be willing to take on some shares? Chance of assignment here is about 9%. It's a good chance of profit. So I could get $100 income on this one, take on some shares. Buying power is not awesome though. Let me see what this, let me clear this one out. So if I buy that put, let me go to 40 cents. Again, that's if I get my 55 bucks. I'd probably do 2 contracts here. So there's a 98% chance of profit, which is pretty good. I've got a profit trap. Max profit of 310. I'm not sure how that's. Oh, okay. So I've got $200 here plus the credit. Okay. That's not bad. So I get 110 bucks on credit. My max profit would be 310. Buying power is a little pricey though. So I'm not in love with that trade, especially for a portfolio margin account. That's real expensive. I mean, it's a high probability profit, but that's a lot of money to tie up for $100 and some profit. I mean, most likely this is a $110 winner over the next 59 days, but it's going to tie up 8 grand to do that. That would tie up probably double or triple that for an IRA account. So let me check that. IRA account right here. Same amount? Really? Same amount. That's crazy. Portfolio margin, same amount. Interesting. Possibly just no margin, higher. Yeah. Hard to borrow. Is it less liquid? Got some, I mean, we got some open interest down there at the $40 strike. All right. I don't mind this trade. 2 contracts, 100 bucks. I don't love that it ties up that much capital though. Probably not going to do this on IRA accounts. How much do I like this trade? Good question. Yeah, I mean, tying up 12 grand on 3 contracts, that's a lot. Okay, I'm going to take this trade for 2 contracts. It's a little income trade, high probability. I got a profit trap of $300, and that would be down to $40 on this instrument, by the way. If we come down to $40, that's coming back to the August 5th low. So the probability profit is extremely high. I doubt this thing is coming down to $40. If it is, I will take the assignment. I'm okay with that. So I'm going to take this trade. Hopefully, this is going to get filled at 55 cents or as close to it as possible. So let me throw this into my portfolio margin accounts. Let's go for 55 cents. So that's working. Let's see if I have to massage this thing down. I don't want to take less than 50 cents. 54. Now the mid price is 43, which I don't love. I could go up a strike. Let me try just 50 cents and see if it fills at 50. If it doesn't fill at 50, I'm going to move the strike. All right, I'm going to cancel that. Well, that was annoying. 45 by 44 by 41. Try that trade for. I was taking up more buying power, less profit. What the fudge? 42. That's okay. More buying power tied up. Profits about the same. About a 12% chance of assignment. If I did take any assignment, by the way, let me calculate that. That would be 42 minus 1 minus 50 cents. I'd own the shares at 40.50, which again, back at that August 5th bottom. All right, I'm going to try this one for 50 cents. Ugh. Really, dude? All right. Freaking A, man. I mean, SPXY I trade a lot when we have volatility plays. If we see a big spike in volatility to the upside, I usually buy SPXY. So I'll just treat it the same way. It's just not a good one for just like general options and income. So I'll keep an eye on it, but it's not working out today. No big deal. Let's keep going. Dollar index, big gap to the downside. I talked about this yesterday in some of the live sessions. We didn't have the DXY reflecting price like we did in the currency market. So we got a big gap to the downside. Oil prices have dropped a decent amount as well. If the oil is going to stay above the 200 moving average, that could be a potential support zone. So we're kind of eating back into this candle. Is this a support zone to hold oil steady? Yes, no, maybe. I don't know. I don't have a play on oil. I don't think oil's given a good sense of direction. We had a brief, little squeeze there because everyone was so bearish on oil, and it was a short squeeze. We did take out this recent high. This could be a rounded bottom. This could be like a head and shoulders type trade. I don't know. Maybe. But higher oil means higher inflation. And I'm pretty sure if any country right now gives a crap about its economy, it's going to try to tame inflation hard. Bank of Japan this week has a rate decision, and I believe they are going to be raising rates this week on Thursday from like 11 p.m. to 2 a.m., where they typically have that big window for the Bank of Japan, their economic outlook. I believe they're raising rates by 25 basis points. Does that mean anything? No, it just means that I'm more interested in trading the Japanese yen futures or getting long FXY, which I might look at here in just a moment. USO dipped a little bit. Natural gas, which I'm long on. I'm still holding long UNG, trying to do a diagonal spread. Gold. All right, we are clearing these highs. That was our December high. That was our November high. Gold's looking pretty darn good. Is there anything on GC futures I could trade? Gosh, man, I would love to see a pull. I mean, we have a pretty healthy bar count on gold. This is my only hesitation on getting long gold. I mean, it's 318 bars. So do we have like I don't know. I've got to wait. I think this could run back to the same highs again. It builds like this. I've seen this happen in a lot of patterns. Builds like this, builds like this, builds like this. Eventually this catches up maybe at bear traps and then starts to go higher. That's wishful thinking, as opposed to I'm just going to get long and then chase this thing. I mean, look, gold is positioned to be bullish. I'm pretty bullish on gold overall. I just want a better price. So maybe GLD. Let me look at a trade here on GLD. See if I can get like a maybe a ratio spread, maybe a 1-1-1. Let me turn this into something, GLD. So I'm not sure what the options look like, but let's find out. If I go out to the end of the quarter, not awesome, but let's try 245 by 240 by 235. Do I love this? Not really. So buying power here to make 40 bucks. Obviously, that's garbage. I want to pull back to get long a diagonal spread. It's not ready yet. A ratio spread, maybe, but then I get a willing to take on 100 shares, which isn't a terrible allocation. What would be a ratio spread that I'd be okay with? If I did the 240 by 235, what's my 200 moving average? 230. Okay. I mean, 230 to 235 wouldn't be awful. So if I did the 240 by 235, yuck. These premiums are terrible. Just not worth it, man. Like it's I could own it at 235. It'd be 234.50 if I took ownership, which is around that 200 moving average, which is fine. But man, I wish there was a better income trade. So I'm probably just going to hold off and keep the shares. I mean, right now, GLD is up around 9 grand. SLV is up around $5,500. So I'm just going to hang out and wait. I just don't like the levels to get in. I don't know. I think from this high, if we come up and retest the high, I know, look, I know there's a pretty solid bid on gold, whether it's just China or it's, BRICS or it's a lot of countries. I don't know. But I could see higher lows. I could see a resistance here, resistance here. I would love a pullback. If I can get one, I'd love a pullback to start looking to position for something out of the way and income driven, right? I mean, I have shares of GLD. I'm okay hanging on to those. I'm just not going to keep adding, more shares at or near the highs. I'd like a pullback. 318 bars is not nothing. I like scanning for, high bar counts just to see if we're going to kind of top out a little bit. That's how I was, looking at playing some plays on playing some plays. I was playing some trades on Nvidia when we hit like the 145 to 150 area. That's how I played MasterCard and Visa. I'm looking at, I was looking at Netflix to pull back a little bit. Speaking of Netflix, we have earnings today. So I'm going to look at pricing out something on Netflix. I've got some levels that I'd be interested in. I'm looking at about an $80 to $85 move on Netflix overall. We got some jostling today, down to $8.55, up to $8.69, about $14, $15 on the day. I do have some big levels towards 900 and some protective levels down into the 840 or lower. We'd have to have a beyond expected move on Netflix. So we're trading at 866 on the day. The week we have earnings today. Is Netflix able to do something? So average weekly ATR is $43. I'm looking at an average earnings move about 10%. So could I price in something that goes both directions and get paid either direction if I put on a trade for Friday? So let me take a quick look at Netflix. So Netflix for this Friday, we've got earnings after market today. Fudge, this will be a little bit tougher. So if I'm looking at about an $80 move with earnings, let me see what I can do. If I went like $50 out of the money, so 866. The issue is the highs are on 9. That's not bad then. I was gonna say the highs at 940. That's right around 80 bucks. Let me see what going like $50 in the money. So if I went up on the call side from 65 to, okay, so if I went up 50 bucks, let me go to like the 9. Try this one for 250. These are all 5. I just go 5 wide. All right, I'll try the 910. If I buy the 910, it's $1.50 to make 350. Not bad. Okay, so that's up 50 bucks. And if I go down 50 bucks, 865 to 810 if I buy and sell. So Let me see what this looks like. So $1.50 on the call side. So Netflix call would be $1.45 debit for a max of 350 to 355. And that is the 910 by 915. Okay, and then the put side, if I looked at the, get rid of these real quick. On the put side, if we went to the 8, 10, $1.28 to $1.55. So I can get $1.50 to $1.55. So how would that work? Well, if I lose on one trade and I lose $1.50 and I win on the other trade and win $3.50, I'd walk away with $2 profit. No chance of assignment here. It's just a debit spread, but that gives me something directionally neutral. I'm well within the expected move. You know, this is already pricing, and this is interesting. Market makers here, $67 move on Netflix, and I'm pricing in about a $50 move one way or the other. Obviously, it's looking to be volatile. I might go out one more strike. So there's $1.35. So the 810 by 805 is $1.30 to $1.40. So a little bit cheaper on the debit spread. And if I get rid of that trade, let's try the other one. So it was a 910 by 915 for $1.45. If I go one strike higher, okay, I might try that one. So $1.37 if I go one strike higher. So basically the way the trade would work would be this. If we went to 915 by 920 bull call spread for $1.40. Okay, and then an 810, I guess I'll just put an X there, by 805 bear put spread for $1. We'll put $1.40. So the risk is this. My max risk is $2.80 debit, and price stays in the middle. That's my risk on the trade. Profit would be I win the call side or put side for, I've got $3.10 max profit, right? Because I'm $5 wide. Actually, I more than that. So I got $3.60 max profit. So if I lose $1.40, so win 360, lose $1.40, I net 220. As long as we're greater than, we're looking at 920, or we're less than 805. That makes sense? So that's one way to play this. You know, we have room to get up to 940. We could have a big blowout move on Netflix and the market gets all excited. We could have a, terrible disappointment and we could drop all the way down to 760 if it's a huge disappointment. But, the market makers are looking at about a $70 move, and I'm pricing in about a $50 to $60 move. I've looked at the last 10 earnings prints, and we've had about a 10% average, which should put us around an $80 to $86 move. So is it a fair trade? Yeah, it's trading both directions. There's risk in the middle, but if we have a big move overnight and the market stays there, so the last time we had a big pop in earnings on Netflix, you can see it on the daily time frame. Last time we had a big pop in earnings was right here. So we were down, we were up. What was that gap? And there was some follow through, right? So we were down to 686, jumped all the way up to 637. That's a $50+ move on that day of follow through. We got all the way up from 686 to, that's an $80 move right there within earnings print. And then the day after we had some follow through. So it stayed there. So it'd be the same type of situation. Are we going to go higher or lower? And if we go higher, do we have some follow through to get up to like $80 of movement? If we go lower, do we have some follow through to get $80 of movement? If so, I can close that out for a nice little winner. Okay, so I'm going to take this trade on Netflix, and let me get this one priced out. So right now I'm looking at about $60 up on this trade, and that got more expensive on the debit. Are you freaking kidding me? So 915 by 920 and the 810 by 805. All right. So if I win $5 and I risk about $1.40 or $1.50, so I win. Max profit on one side would be about $3.50. $3.50. Take a loss of $1.50. I net $2 on the trade. Okay, I'm going to take this trade hopefully for $2.75 or less. So $2.70. Ooh, that's better. A little cheaper. A little cheaper. Okay. All right, I'm going to try to get this for $2.65. Okay, 270, 267. I'm going to try to get right at the mid price. Now it's mid price 272. Oh my gosh. 275. All right, I just got in for 275. All right. I'll put this in Pulver Alerts. This will be an earnings play. So in my stock option side, this will be a new trade. Netflix 124 expiration. So I'm buying the 915 call, selling the 920 call, buying the 810 put, and selling the 805 put. Got in for 275 debit. Max credit would be $5 if Netflix is greater than 920 or less than 805 by 124 end of day. If this position shows, let's say, 375 credit or higher, I may look to protect profit. So I don't have to wait all the way to expiration on Friday. If this thing has a big blowout move to the upside and it's beyond expectations, and we get $100 out of a max 250 or 220, max is 225. If I'm up $100, I'll probably just take the profit. Okay. So Netflix earnings 121 after market. Market makers expecting $67 move. My earnings history shows about an $80 to $86 move. Okay, so that trade is in, and post this in Pulver Alerts. There we go. So I need this to get above, oops. Get out of here, Chrome. Nobody likes you. All right, so if we are, let me put my lines in the sand. I want to see if price will break above. Can we get above 920? Okay, so if we're above 920, or we are below 805, there. So if we're coming back and checking this at all this week and we are below 805 or we're above 920, there's profit to be had. So here, and I'll add to this. So I have the 915 by 920 bull call, 810 by 805 bear put, 275 debit, $5 max profit. That way I can post the screenshot. There we go. Okay. Trade incoming in 5 seconds. In. All right. Pulver Alerts posted. Little earnings plan Netflix for this Friday. I would like to take a look and see what else we have for earnings. Netflix is a big one this week. United, Abbott. I would want to take a look at some of these. Let's take a look at some of these healthcare ones. ABT. I do have some exposure in this stock, I believe. ABT. Yep. I think I bought it. I might have actually dumped the shares. If I still have it, let's find out. ABT. I bought some shares. Okay. So that's it. I just dollar cost average in for like $1,000. No worries. It's up. It's up something. I'm looking for ABT to be higher. We get back to all-time highs again or close to it. I don't mind this trade here. So if this is a swing higher, I mean, if this is going to symmetry, I'd be looking for maybe all-time highs here. We'll see. Nothing fancy, nothing crazy on that one. What else for earnings? Airlines, let's take a look. So we got United, Alaska, and American Airlines. So United Airlines is UAL. Look at that mofo. That is insane, man. I don't know how an airline did that. 200% in the course of what? Since August of, I mean, since we had like that Labor Day sell-off, this thing just ripped. That is insane. Wow. I don't really know what to make of that outside of I would be almost willing to short this thing. But that could be a stupid play too. So let's see. UAL. It's done some pretty wild stuff. Is it possible on UAL? I mean, earnings can do whatever it wants. I'm seeing a pretty large level around 105. What would that be if I just put in a bear call spread right now? UAL. Go to the 24th. If I buy the 109, sell the 108, 48 cents to make 52 cents. It's not a bad trade. Issue is if we have a positive print, it goes up to like 115 or 120, that trade's toast. So I have a 120 level that I'd be watching closely. I've got the 105 level that I don't know. Was there earnings on it this morning? It was after market, I thought. Yeah, it's after market today. So I don't know. I don't love it. Let's go ABT. Let me bring out some. I'm going to bring out the heavy hitters here. So ABT. ABT, is it possible that we get to 113? Maybe. Expiration for Friday. I don't love that. Yeah, it's only a couple dollars away. I'd just stay out of that. Okay, what else? Johnson & Johnson. Earnings season is just getting underway. Johnson & Johnson. I would think this thing's got to be like a freaking cash cow. Could have some resistance in the 150 area, but if we have a decent move, yeah, I mean, it's just in a channel. I've got a 140 cash secured put on Johnson & Johnson. I've had that one for a while, and I've got it rolled out to this June. But yeah, we're just in this like pretty corrective channel. I don't know if we come back to COVID lows eventually, where I would say that's a no-brainer buy right there. We come back into COVID lows, and I'm just buying some shares of Johnson & Johnson. Otherwise, maybe this goes up and back down, and we just deal with that channel for a while. But I don't have an earnings play necessarily. No major outliers outside of this thing. Looks like it should be going higher, but I think there's better. Halliburton, maybe HAL. Halliburton is at 29.80. Stuck between a bunch of levels. Don't love that either. Discover. Should be like Discover Financial. So DFS. You got to be kidding me, man. These like consumer stocks are nuts. 189. What's the dealio? I mean, fighting momentum seems like a rough call. But man, if there's any direction to this play, and the earnings are Wednesday after close, I mean, we'd have to have basically counting on like a negative print. So I've got like a 170, 165. What's the expected move on DFS? DFS for this Friday, about an $8 move. That doesn't get me down to those levels at all. And who knows? Maybe they're like, yeah, everything looks good. People are paying their bills. Everyone likes credit cards. Also, credit cards still do well, even if we're facing a recession. It's like when people start tapping into their credit cards more and using more, credit card companies still do well until like all of a sudden there's delinquencies and people aren't paying their credit cards. That's a different story. But when credit card interest rates are like 25%, 28%, probably the worst debt you could possibly imagine having, but people are carrying it somehow. Anyway, only an $8 to $10 move. Let me see really quickly. If I go option slam, let me price one out. So DFS. Average moves about 6%. 7, 7, 8, 6, 8, 9, 10, 10, 7. Average is 6%. That's reasonable. I'd say that's reasonable. I think I can trade around that. So 0.06 times 189. That's a $10 to $11 move, man. Okay, let me see if I can price this one out. This one might be decent enough. First, before I get all ahead of myself, how many times do we at least get to 6% post earnings? That is the big question here. So if I went to next week, not this week, how many times do we get to at least 6%? We did not get it there. We did not get it there. We did not get it there. We did there. We did there. We did there. Did not. Did. Did. And did. Classic earnings fashion, 6 out of 10. Okay. It's usually not greater than 6, and it's typically not less than 4. Like earnings is still like super crazy coin flip. So the reason I was looking at this is like, okay, so if I price in something where it's like, can I at least get a 6% move? And a 6% move would be roughly $11, right? So it is possible that I could price in something relatively cheap, go out to next week, not this week, but let me see what this one actually looks like. So if I go to next week earnings on DFS and have some follow through, we got 250 spreads, which I don't love. But if I priced out like 10 apart, so we're at 190 right now. So if I buy the 197 by 200 and I buy the 180 by 177, so it cost me $67 to make $2.50. So that give me, for a $67 risk, I get $183. That's a good play in my opinion. I'm going to take this trade right here. I'm going both ways on earnings. Does price go somewhere by next Friday? And I need price to be either greater than, so either greater than 200 or less than 177.5. So if I can make $1, let's say $1, what? $1.80. So I make $1.80 to lose 70. I can walk away with $1.10 profit. So it's a fair play. It's not bad. Is there risk in the middle? Yeah, there's risk in the middle. So what's my max loss? This. My max loss would be the debit. Okay, so I don't mind this trade. Ivy rank at 45. Right outside the expected move. Do we have any open interest out there? Not a ton. I see this level here could be interesting. The 170 has a 1,000 open interest. Doesn't mean it's directional. It just means there's liquidity there. But to the upside, though, I don't see a lot of anything. So price-wise, I like it. Can I make it fair this way? If I just take it in a smidge, I go one strike, so 73 cents to make $1.80. Still, that's pretty good. That's only going up $7. And then this one here going down $7. About the same. Is this just not like a super liquid play? There's 67 cents. I don't know if I'm going to get filled on this trade. This seems crazy. I could do a bull call spread, $6 higher, essentially one strike, and then do okay. That one eats into my profits a little bit more. So I pay $1.60 to make a net 250. That's a little bit less profit than what I want. Crap. I'm gonna keep looking. I like it, but I just see no open interest, and therefore that means a little bit less liquidity than I want. So that might be a tough fill. I'm gonna keep an eye on this one though. I'm just gonna put in here. Are we greater than 200 or less than 180? Just as a note. Are we greater than? There's another way to play this too. I'll take a look at this. So are we greater than 200 or are we less than 180? I want to take a look on that one. So that's kind of just a checkpoint. If we are, then we could have had a nice trade. The other play on this one would be that we're at 190. So I buy the 190 and I buy the 187. So I kind of split the difference here. Okay. If I want to make this a little bit cheaper, the broker's going to ask me to pay, basically $8 for what should be about $11 move. Okay. Now I can make this cheaper by selling, maybe 10 wide. If I go 192 to 202 or 187 to 177, I get nothing for that. So if I go 190 to 180, 190 to 200, so I could pay $6 to make $10. Probability is decent that we're going to get like a $10 to $11 move. That's what I forecasted here. About $11 is the expected move. That's 6 out of 10 times we're getting a move to that size. But you're paying like 70% of the premium. Is it cheaper to go one strike further? Not really. I pay another $1.20 to make an extra, 250 is good, but you're paying like 50% of that. All right, I just don't like it. I don't like it that much. Fudge it. I'm moving on. That's Discover. Anything else I highlighted? American Airlines, Alaska Airlines. American Airlines. I have some puts in this stock. I think they're expired and done. I went out to leaps. So I've got a June 2025 leap and a December to the end of the year. So right now, my American Airlines exposure, I'm already up $1,000, and I'll let that do its thing. The stock itself, a lot of the airlines, it has done pretty well. I would say, are we going back up to highs around $25? I didn't buy the shares. I certainly wish that I would have just bought the stupid shares. That'd be, that'd be up $8 a share. I didn't buy the shares. That was lame. now I'll wait. If we get a pullback on AAL, then maybe I'll buy a dip or do a diagonal spread, but I might just stay out. So that's AAL, Alaska Airlines. I'm not sure what their ticker is. Alaska Air Group is ALK. Another one, just like where the hell did airlines just get crazy profitable? Up 100% in like 5 months. It's nuts, man. SkyWest, I do have some plays in. This one's still up $113. This is out to October of this year. Delta, can't stop, won't stop, also making a big run. But United had one of like the biggest runs. One of the biggest runs. Wow. All right. Anything else? Union Pacific, that's UNP. Just trade and chop suey here. I think freight is reasonable. Is there an income trade here? Let me check. Let's look at some IV on UNP. IV's at 45. Options I would probably imagine are not awesome. Anything under $200, maybe. Let me see. UNP. If I did we got earnings this week. If I did a ratio spread, let's go out to March. $200. Nope, it's just not good, man. Make 50 cents to risk, 20 grand if I'm going to own it. No thanks. No thanks. All right, earnings a little lame this week. Verizon, American Express, Next Era. Let's take one quick peek at those, and then I will wrap it up here. I'm trying to find some trades, but not liking the earnings stuff. I take the one on Netflix. That's fine. Discover was decent, but I just don't like the pricing. You got to go 250 wide. It's only looking at like a $10 move, $11 move. I think you're going to overpay that premium. The other one would be like the debit spreads. So Verizon. So we'll go Verizon AXP. So VZAXP and NEE. Okay, take a quick peek at those. So Verizon. If we have a high enough IVA, this one might be a decent income play. IVA 63. Go out 60 to 80 days, perhaps. Premiums are just absolute atrocious. Gosh, man. I want if I'm going to take ownership, I want it at 31 bucks. I just don't. I mean, you get literally 0 cents credit on a $31 put. That's out 59 days. If I go out to April, I mean, this might be worth one trade for the year. It's still 0 bid. Garbage. Now, for an earnings play, let's see. Verizon. Let me check my liquidity levels for this week. I got a pretty decent move. I could see this going up towards $40, but it's trading at $39.30. It's like, what do I do with that? Let's find out. Verizon. This is on Friday, by the way. So probably the best thing to do on this one would not be buy a call now if I'm looking to go out for maybe a Thursday to Friday. If we're pulled back a little bit and we can get a rip up to 40 bucks, I might buy a Thursday to Friday expiration, and I might just wait. If I did a bull call spread, cost me 20 cents to make 30 cents. So if I did that trade, I risk 80 to make 120. But we've got to get to 40 this week. I want to see if we pull back. We pull back to 39. Maybe I can shift it down here for the same price and get a little bit more wiggle room. All right, I'll put that one on the to-do list. That might be a good trade this week. And then AXP is Amex. This thing's up to all-time highs again. It's crazy, man. We're running into a pretty big resistance point around 320. Earnings this week on AXP. Average move around 6% on a 318 stock. So about a $19 to $20 move. Is the options chain $1 wide? Nope, 250 wide. So you're looking at about a $19 move with 250 strikes. IV's not fantastic, but if I buy the 320, buy the 317, sell 20 wide, 317 to 97. So I'd pay $11 for a probability move of $19. Not awful. Now it's how many times do we actually get to the average move? So 6 and change, I mean, pretty consistently we get to at least 6%. Let's prove that with the last 10 earnings. So how many times do we get to 6%? Let's go out 8 days. So if we go to 6%, we got there day 8. I'm not going to count that one. Didn't get there. This one gets there after day 1. Okay. This one gets there. This one does not get there. This one gets there day 8. I'm not going to count that trade. Doesn't get there. Does get there. Doesn't get there. Doesn't get there. Yeah. So anything long vol on American Express, I don't love. It doesn't get to that 6% within usually like the 1 to 5 day window that I'm looking for. So probably going to stay out of that trade for right now. All right. I'm trying. I tried. Not really loving anything today. But we'll look at about a $20 move. So, 318 to 320 or 338, or 318 to about 300 to 298. So I just want to see if price is moving to the expected move. If it does or doesn't. If it stays in between there, then I'm glad I didn't go long, or I mean it's out of the way. I'm just looking to see, does it go up enough for me to make money? Does it go down enough for me to make money so I can trade it both directions? Right? Maybe, maybe not, but I don't love it. And then last one would be NEE, and then I'm going to wrap it up here. So NEE, 71.65 is the current price. This stock is down for the year, correct? I think NEE, that we looked at that through the sectors. This should be in, is this energy? No. Is this utilities? Yep. So yeah, for the year it is down, and then Constellation and Vistra up a ton. Okay, next era, let's take a look at it fundamentally. NEE. Dividend not well covered. Earnings forecasted to grow. Doesn't have a lot of upside. It's a utilities play, so it's not crazy awesome. Yeah, you're looking at like $6 upside. Not super exciting at all. Constellation's been performing way better. Having a 2 to 3% dividend doesn't make it that exciting either. I mean, I don't know. Is this a Head and Shoulders in the works? Right? Is this thing building up for some type of Head and Shoulders accumulation? Maybe. But all right, that's it. I'm going to take the trade on Netflix. Got some income trades in an SPY, QQQ. Price for today, if we go back to the SPY, things are still pretty darn quiet. So hanging in there today with a choppy day. We did not come back to fill the gap entirely. We're just very quiet on the day thus far. Look, just keep a heads up on this price action. If we end up making a kind of I don't know, that might be too aggressive. I'm looking to see how price. If price can't get above 60.50 on the SPX, be careful. I still think this is potentially a bull trap. I don't know, is this market going to be able to celebrate all-time highs sooner than later, or do we revisit lows or gap fills? We got a lot of gaps right now that are like pretty sizable. So that gap right there, that gap right there. If this structure like rolls over, I could see some gaps filling. I don't know what the catalyst is going to be. It doesn't matter. There's enough geopolitical stuff going on. Trump could open his mouth and say something that the market doesn't like, and it prices in something wild. Who knows? But for right now, I mean, it's better than dealing with like a crazy bear correction at the moment. We've had a nice little pop to the upside since the 13th of January. Let's do a quick spot check. Gold, like I said, still up, which is totally fine. I just don't want to do anything. I'm glad that I'm long gold. I'm going to remain long gold. I'm looking to add to my positions, but just not yet. I'm not buying all-time highs. So I know that gold is up. It remains bid from all these central banks. That's fine. I could see this pattern in gold. Comes up, resistance, and this way. But this would be a spot where if there's any breakout, this is a bear trap in my opinion, and we look for the blowout top. That'd be the trade I'd look for. Otherwise, I'm still looking to see if we pull back to the 200 moving average. Silver, still looking to see if silver gets back to 32 and change. Bitcoin at 106. We did poke some fresh highs yesterday. And I mean, Bitcoin still remains a pretty good play. IBIT, I don't love averaging in more. I do have a collar on my position at 67. I'm going to look to roll. Let me see what that looks like right now, actually, before I go. So IBIT. And let's take a look. So if I were to look to roll, I have shares. I have my covered call at 67. I've got a protected put at 40. Could I roll this position? So it's out to March. Could I roll this up? So I don't have any expirations in between until March or May. Yikes. I definitely want to try to roll it up in price. So maybe the best way to do that, if I was going to roll it, would be roll my put down to maybe 35 and roll the call up. I mean, that's a 38 delta. Wow, that's still way up there. I'm just going to wait. If I get it called away, I'm just going to establish a new position on it. I think I'm just going to leave it as is. So my break even trade, break even's 35.10. If it gets called away at 67, it's not a bad play. 67 minus 35.10. I make 13 grand on IBIT, and I'll reestablish another position and put a collar on. So it's probably better for me just to stay put. If it doesn't get called away, so be it. I'll add another collar, but we'll see. So there's your run back up towards all-time highs. Is this a range trade? Maybe. You know, I know everyone's excited about this administration being pro crypto, but do expect some volatility. If we have any risk off in the equities market, we're probably going to have some risk off in Bitcoin. But Bitcoin is what I'd rather trade. I don't want to be any part of some type of crypto bubble. You know, so if you're trading the Melania coin or Trump coin or fart coin, good luck. Godspeed. MicroStrategy still hanging in there. This one I don't mind rolling just because it's a nice. I mean, the premiums are ridiculous, and it's a good little sentiment play. Like if Bitcoin is maintaining bid, then MicroStrategy continues to do pretty well. So I think I'm rolled out to March on this one right now. Yep, up to 310. So that one's okay. Make a few bucks on that. Coinbase looking good for income as well. Anything else here? DAX has had a heck of a run. That's impressive, actually. I think a lot of this is also due to China. China's been looking better. So Mag 7, rotation out of Mag 7, right? Apple, big fat drop to the downside. Income trade at 210. I might be taking some shares of Apple. I'd own shares around 200 bucks. Wouldn't mind it. That'd be another, you know, Apple had a terrible start in 2024. If it's down another 25%, that'd be wild and crazy. Is Mag 7 going to be like the worst basket to be in? I mean, Amazon's back up towards all-time highs. Google just poked all-time highs today, but faded. Meta, I still want to get a pullback. Microsoft, I really like Microsoft. I'm going to keep looking out to April, May. I'm going to look at that trade today, actually. I might post that for Pulver Alerts if I like it. Netflix, we got earnings. I'm going to take the earnings play. Otherwise, it's ratio spreads and income trades. NVIDIA, collared at 140 and 130. Tesla, put in some shares, got some dollar cost average positions, taking some income trades. I'm going to look at an April. Okay, so let's go. So this week is 121 to 124. Since we didn't have trading yesterday, I'm going to look at Mag 7 ratio spreads or income trades, and that would be Microsoft, Tesla, and possibly Netflix. Netflix is just a little expensive, but the other ones are okay. And then maybe Coinbase. Then another way to income trade IBIT. Berkshire Hathaway's responded really nicely. That's a ratio spread that's mostly in profit right now. Bond-wise, yield-wise, we are getting some follow through to the downside on the 10-year. So the US 10-year being down is a good sign. Does it stay there? I don't know. I hope that it does. For the sake of the consumer and the sake of housing and the most unaffordable market we've ever had in this country. But it's going to be important to see some follow through on the US 10-year. Bonds are still trying to find their groove, but they're off of recent lows. So that's a step at least in the right direction. We'll see. You know, a lot of people calling for the 5 to 5.5% US 10-year. That's going to put a lot of strain in the market. I don't know, maybe that's too much bear, right? That's too much doom and gloom right now. If you're looking at 10-year going to 5.5%, 6%, that's something's going to break. If we're coming back in these levels that we start to top out, perhaps we're topping out now. If we do and this goes lower, awesome, right? Maybe we can get some relief. I don't know if we're going to get back to these levels, which I'd be really excited about, but we'll find out. Dollar is the move from yesterday. We had big moves in Forex yesterday. The dollar index didn't reflect that, but it is today. So dollar's down today. Yep. So currency strength. So dollar's not dropping like a rock. It's already dropped yesterday. This is why the dollar's down. Dollar was down yesterday, but it wasn't shown in the DXY chart. Today, the dollar has been dropping, but it was stronger. I mean, this is interesting. Stronger dollar, stronger yen, stronger Swiss, but those are starting to fade a little bit. So we had a big move on dollar up, New Zealand down. That's CAD rather. So dollar up, CAD down. Where's my dollar CAD at, by the way? I already hit profit on that one. I'm just curious if it's going higher or lower. So my 44.80 got hit. Are you kidding me, man? Look at that nonsense. So I got spiked out on this first little rip. I mean, you talk about playing these noisy highs and lows. Like, that is what makes trading futures and Forex annoying. That is why I like to trade options. Now, I was on that trade to the upside until we hit that 44.80 point, which we've hit now 3 times. So once, twice, 3 times, lots of manipulation right there, but totally good if you're holding that long. Now it's over. I'm done. You know, is that a sign of a top? I don't know. I'm staying out of it for right now. I could care less what this dollar CAD does. Okay, but if the 10-year keeps dropping, the dollar index will probably go with it, or vice versa. If the dollar keeps dropping, US 10-year goes with it. I think for right now, that's a good sign for Q1. If Q1 gives us dollar weakness and US 10-year weakness, that would be awesome. That is going to be a positive flow for equities if that's the case. If this 10-year is sticky and continuing to stay bullish and higher lows and higher highs, it is going to be incredibly difficult for equities to go higher. But if we see 10-year dropping and dollar dropping, or dollar dropping, 10 years, like, I don't know which one's leading the race. But if they're both going together as correlated, then that's a good sign for equities to flow higher. Okay. All right. That being said, I'll let you go for today. I'm going to try to find some more earnings plays, maybe for next week, though. I didn't love these. You know, I looked at pretty much all of them. I don't have any major liquidity levels that I'm interested in. I'm trading Netflix right now, just because it's typically high open interest. It's liquid. It's a big mover. So I'm trying to price in a move where I can make some bucks, and then I will see what happens. Okay, I'll let you go. See you tomorrow. Thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.